Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. We've come up from the highs, but it's a decent day so far. Again, it's yet so close and so far from the 25,000 mark. The mid-caps, they continue to do well. The mid-cap index is up 0.5%. Banks are participating today, and it's a lot about individual names and big moves on some of them.
Big moves on some of them, banks and the entire PSU space, utilities as well as OMCs today. That's something that's actually taking the market higher. Quite a lot lined up on the show. Let's start off with the top headlines. Stocks climb up after the dip in the last session. Oil and gas along with autos lead the gains, while FMCG and pharma come under pressure. Broader markets outperform.
Colgate-Palmolive surges around 6%, reacting to a stellar set of Q1 earnings that were a beat across all parameters. The company also witnessed continued demand pickup in rural areas.
Idea Forge slips more than 11% in trade after poor quarterly performance. The company reported 11% decline in revenue from operations on a year-on-year basis, while EBITDA margin saw a sharp contraction to 4% versus 29% last year.
Granules India is higher in trade after reporting Q1 numbers. Revenue surges 20%, EBITDA and margins also rise. Management says revenue share from North America increased to 74% versus 61% on a YOY basis.
Firstsource Solutions surges on a strong Q1 performance. Dollar revenue grows 7% sequentially. The company raises FY25 constant currency revenue growth guidance to 11.5% to 13.5% from 10% to 13% earlier.
Okay, all right. Those are the top headlines. Let's talk about the benchmarks and some individual pockets which are doing well. As I said, markets have come off from the highs around 90 points. Still, it is a market which is trading in the green after that sharp recovery that we saw at the initial trading time as well. The CPSE index, the biggest gainer, 1.5% higher there. And there are more movers right now that we're seeing in the broader markets. The advance decline ratio in favor of advances. The FMCG pack is lower. The IT pack is lower. So is the pharma. So defensive's not doing so well. But there's really nothing to complain in the broader markets. And we'll talk about those stocks in greater detail.
Nothing to complain in the broader end of the markets. As you can see, a lot of results coming by. Vardhaman Textiles, the latest company to go ahead and declare its results. Stock reacting positively, almost 4% higher post the results. But this is the show Midcap Radar, and this is our special segment, Midcap Movers. Today we have Vamakshi, who's standing by the wall to take us to the midcaps that are moving in the session. Vamakshi.
Well, absolutely. Like you rightly said, Vivek, there's nothing to complain about, but let's look at some of the individual stock moves in the trading session today. Let's first look at PCBL. The stock is up in the trading session today. CAMS is also a high flyer. In fact, the stock has been gaining for the second consecutive session. Fine Organics, Nykaa, some other names that are uppers in the trading session today. And Nuvama Wealth reported a good set of numbers yesterday. The stock is up for the second consecutive day. Oil and gas stocks are also a buzz today. And in fact, HPCL reported its numbers. It was a weak set, but the stock is trading higher today. BPCL and Oil India are some other movers in trade. As far as some earnings are concerned, we have some stocks that are reacting negatively to the news flow. And as you can see, Idea Forge reported a very weak set of numbers. The stock is down nearly 12%. Varun Beverages also very recently came up with its numbers. The management also joined us, and in fact, the stock is trading lower by almost 7%. But there are some stocks that are reacting positively to their earnings. That includes Car Trade, Jindal Drilling, Apar Industries, as well as Granules India. All of these counters are buzz in the trading session today on the back of a good set of numbers.
Okay, all right. A very interesting list. A lot of movers in the broader markets. Thank you so much, Vamakshi, for joining us with that list. With that, let's move on now and let's welcome Shrikant Chauhan from Kotak Securities for a technical check on the markets. Shrikant, good afternoon. Thank you so much for joining us. What is the trade suggesting now? We did come off from the highs, but do you think there could be an attempt to go higher from these levels?
Yeah, it looks like the way the market is consolidating before the crossing the level of 25,000. I think it is like on the verge of crossing these levels, and eventually we are going to see the levels of maybe 25,200 or 300 based on its technical formation. So I'm of the view that it may consolidate between 25,000 and 24,700. In case if there is any correction because of any reason, I think we should look for taking some position close to 24,800, 850 with a stop loss at 24,700. But relatively, Bank Nifty is doing much better because there we are seeing entire basket is like trading and sustaining above important levels. So there we are of the view that Bank Nifty is also heading for the levels of 53,000 or 53,500 sort of levels. So Bank Nifty is relatively better, but yes, Nifty is also on the verge of crossing 25,000 level.
Good afternoon, Srikanth. Srikanth, what are your individual picks for the day?
I think, see, there are like number of stocks which are crossing their all-time highs or they are consolidating for several weeks. And after consolidating for several weeks, they are crossing their highs. So, and these stocks are like relatively better, I mean to say, in terms of their entire, we can say, management quality, or even if we go through with their entire performance of last several years. So in that, we like Ashok Leyland. And here, if you see the technical pattern of the stock, then it has spent nearly 7-8 weeks within the range of 245 and 220. But after crossing these levels, 245, now it is into momentum. So from here, the stock can move to the levels of 300. That's the overall view. It's a buy at current levels. It is correcting from the highs, but it's a buy at current levels around 250, 252 with a stop loss close to 240. And the other stock which we like is Castrol India. And there also the stock has crossed its previous high, I mean to say highest of 2014, which was around some 260, 65 levels. And now after crossing this level, the stock is also heading towards the levels of 320 or 330. So there also we are specifically bullish and based on its technical pattern. So it's a buy at current levels, more on dips with a stop loss close to 250.
Okay, Castrol also reports numbers today, so that'll be important to watch. Thank you, Srikanth, for joining us. It's time to slip into a break. Management of Mass Financial Services will join us on the other side to discuss their Q1 numbers and more. Stay tuned for that. Welcome back. You're still tuned in to Midcap Radar. It's time to focus on Mass Financial Services. Company's profit after tax and asset under management improved on a YOY basis. Asset quality came in a little bit weak. To understand more, let's welcome Kamlesh Gandhi, the Chairman and Managing Director at Mass Financial Services. Mr. Gandhi, I wanted to understand about the asset quality. The other parameters look good, but in absolute terms, gross NPA has increased on a quarter-on-quarter basis. Wanted to understand what's the outlook going forward in terms of gross NPA and net NPA. Is there any market or any segment where you're seeing some pressure? Can you hear me?
Sir, please.
Can you hear me? Mr. Gandhi, am I audible? Okay, we'll try connecting again, Mr. Gandhi. Looks like there is some technical issue that we are facing. But if you look at Mass Financial numbers, remember their targets for FY25 stood at 20 to 25% AUM growth, gross NPA between 2 to 2.5%, net NPA between 1.5 to 2%. This time around, the net interest income is up 31% on a YY basis. So decent numbers when we talk about the NII. The gross NPA absolute figure, however, did see an increase on a quarter-on-quarter basis, but of course that is something that we will connect with Mr. Gandhi in just a bit and get more details about. Meanwhile, if we look at the markets, the Nifty, it has picked up a little bit of pace, so that one is up around 67 points, and we have the Bank Nifty, which is up around 330 points. But overall, it's a lot about markets and stock-specific action. Let's get back to Mass Financial Services. Mr. Gandhi, I wanted to ask you, what's the outlook on NPAs from here on? Gross NPA in absolute terms has increased on a quarter-on-quarter basis. Is there any segment where you're seeing pressure? What's the outlook on these two numbers, gross NPA and net NPA?
So if you, good afternoon. So if you see the overall quality of assets, we have a range-bound NPAs, as we always projected, anywhere between 2.25 to 2.50%. And the segment in which to whom we cater to, this is well within our expected lines. And we continue to hold that the asset quality is quite strong, and going forward we'll be in a position to maintain the NPA levels at around 2.5%, below 2.5%, and net NPA in the range of around 1.5%. So overall, it was a good quarter for us in terms of asset quality also.
Mr. Gandhi, just give us a sense of how AUM growth panned. We understand that sequentially it was up around 2.5%, year on year up almost 24%. Going forward, what kind of run rate can you maintain over there? And also, what is the outlook for disbursements? If you could share your FY25 outlook.
So our stated objective since long, as I've shared number of times, is to grow anywhere between 20 to 25% on a yearly basis. And just to share with you, we are not the company who chase the quarter on quarter or a sequential quarter growth. But we are very confident of the fact that we will be in a position to meet our stated objective of growing anywhere between 20 to 25%, which we have done since more than 2 decades. We have maintained that trajectory of growth of 20 to 25%.
Okay, all right. So you talk about maintaining your guidance, but just trying and understanding some of the industry trends as well. One is that your NIM is up in this quarter, which is bucking the industry trend. You had raised around 500 crore rupees via QIP. Did that aid it? And in terms of rural markets, what is the recovery looking like there?
So in terms of our capital raise, I think it hardly had any impact this quarter because we raised the QIP money in the latter part of the June. And by the time the money was available to us, it was already 25th or 26th June. So the improvement in NIM is the function of our slightly higher yields that we could recalibrate looking at the cost of funds. And in terms of the rural recovery, we are, as far as our segment is concerned, we have not seen much stress on the portfolio because of the rural lending. And that is mainly because of the fact that we have been extending credit where it is due, being prudent in terms of our lending practices since long. So for us, rural portfolio has remained more or less stable.
Mr. Gandhi, could you give us a trajectory for the NIMs going forward? And also, incrementally, what will be the cost of funds versus the average cost of funds you've enjoyed historically?
See, come again on
the margin guidance, the NIM guidance, and what will be the incremental cost of funds?
Mm-hmm. So in terms of NIMs, we have always maintained that we'll be in the trajectory of 6.75 to 7.25% on NIMs. And that is what we intend to maintain, and that we have maintained over a period of time. And in terms of our cost of funds, I think hopefully after Q2, we might see a reduction anywhere between 0.10 to 0.15, 0.10 to 0.15 basis point in reduction. Because on account of 2 counts, we might expect some easing of rates in the economy. And number second is we have been recently upgraded to AA minus from our A plus category. So both combined should hopefully reduce our cost of borrowing in next few quarters.
Okay, all right. Mr. Gandhi, it was a pleasure speaking with you. Thank you so much for joining us today and giving us all those details. That's the word coming in from Mass Financial Services. They maintain their guidance and they say that the outlook continues to remain very positive. We'll slip into a short break. When we come back, we'll talk about more in detail about markets and a lot of stock-specific action that's happening in the broader market. Stay tuned.
Welcome back to Midcap Radar. The company on focus is Firstsource Solutions. The company's stock surges on a strong Q1 performance. In our segment, Midcap Spotlight, Rima will be focusing on Firstsource Solutions results.
Thanks so much for that. So it's a strong start to Firstsource this time. The company's reported solid revenue growth, 7% on a quarter-on-quarter basis. Revenues have gone up by 15.6% on a year-on-year basis. And this is a company which has struggled on revenue growth. If you pull up the year-on-year revenue trend for the company, you would see it's been a long time since the company achieved a double-digit revenue growth, which they've managed to do this time. Because of this Q1 performance, the company is also up to the full-year revenue forecast. Now they are saying FY25 revenue growth will be between 11.5 to 13.5, higher than their earlier guidance of 10 to 3%. The company has also signed 3 strategically large deals in the current quarter. They've added 10 new logos. Logos means clients across BFS, healthcare, and communications, media, and telecom. The company also goes on to say that the pipeline is robust. Margins are slightly lower on a quarter-on-quarter basis, 10.6%. The company will hold a conference call later this evening, so we'll get more clarity on the way forward. Back to you.
All right, Rima, thank you so much for that. In fact, Sanjeev Goenka, Chairman RPG Sanjeev Goenka Group, tells CNBC-TV18 that he expects Firstsource profits to grow by 2.5 times in the next 3 years. Listen into that conversation.
I would actually expect profits, PAT, to grow about 2.5 times in the next 3 years. We are now getting 2 wins a quarter.
Okay.
And these are major wins. And the target is to get to 3 wins a quarter.
Okay, all right. The other stock on our radar is Varun Beverages. It reported a good set of quarterly numbers. We spoke to the management as well. Mangalam is joining in with what's happening with the stock price. It's down 6%, Mangalam.
That's correct. So the stock is down 6% today post numbers. One may attribute it to some routine profit taking, largely because over the last 12 months, the stock has doubled. And over the previous 12 months, before the last 12 months, the stock has doubled as well. In effect, over the last 5 years, it's given you 1,000% return. So, nothing problematic with the numbers. There's been good growth overall. The company has gone ahead and announced a stock split as well. Face value 5 turns into face value 2. 28% revenue growth is what the company has reported, with gross margin improvement of 220 basis points. Remember, this was a seasonally strong quarter, mildly offset by out-of-home consumption, largely because of heat waves. EBITDA grew by 32% and the net profit grew by 25.5% as well. Q2 volume growth was 28%. India volumes grew by about 23%, and carbonated soft drinks volumes grew by about 32% itself. Remember, India, Sri Lanka and Nepal are 83% of their revenues. For Africa, which is a smaller part of their overall business but growing very fast, the company said the current quarter was a low season, so in the second half of this year we'll see growth coming in from Africa itself. The net debt on their books, 5,880 crores. On an absolute basis it's high, but on a quarterly revenue run rate that the company does, it seems rather slow. Sub 1 time EV to debt to EBITDA is what the company is having. They target overall volume growth at current levels itself this year, which is close to around 19% that they've done in the first half. They will look to maintain their margins at the current levels as well. Sting, which is the energy drink, has grown very fast for them. From 7% last year, it's now 15% of volumes, will be 20% by the end of this year. They will pause India capex this year because they've already added 45% capacity. So maybe for the next couple of years, we will see some ROCE expansion as well. And the most important thing to track for the company is diversifying outside of drinks. They've had some tie-ups with PepsiCo in Africa for the snacks business. They will add to revenues of the company. No plans to currently enter the snacks market for India because PepsiCo doesn't want to sell it. But the company, if that were to happen, would be a big diversification and positive for them as well.
Thank you so much for that, Mangalam. The stock seeing some profit booking after reporting its Q1 numbers. But if you could pull up one stock, and that's Exide Industries. The company just came out with its results. After that, the company has also uploaded a press release to the exchanges where the company has given some updates regarding the important lithium-ion project. The company says that the project is proceeding as per the timelines. And the other thing that the company has mentioned is that the demand for energy and energy solutions is something that is expected to rise significantly. But on a tempering note, the company has also said that commodity prices are increasing, but they continue to focus on profitable expansion going forward. Exide Industries, after just declaring the results, down 1.7%. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner when we return.